Hi everybody, Brian from Bear Bull Traders here. It is Sunday, December 2nd. It's going to do a weekly recap on what happened in the market and some stuff happening over the weekend, the G20 summit, and of course passing of Bush Sr., which means the markets are going to be closed on Wednesday, and that'll lead for maybe some interesting things happening with the options markets and stuff like that. But it'll be a short week regardless. So let's just take a quick look here at the market that was for the last week. And you can see here, still bringing up this chart with FinViz, showing some of the market internals, which I still think are kind of a little funky. You can kind of see here new highs, new lows, still pretty bearish. Stocks below their 200-day moving average, still a significant amount of stocks below their 200-day moving average, and markets are still pretty high. And I guess that's a bit of a dichotomy. Not really sure what's going to happen or if that means anything, but yeah, that's just the way it is right now. So let's take a look at the groups that were performing here. We had utilities again, got these safety plays. Utilities has been, it's been coming up here a fair amount. And over the last, say, 6 months, here's utilities high here, healthcare utilities, all 6-3, 1 month, the outperformers. Technology came back pretty hard during the week here. We had a good bounce on technology, and you can kind of see here it's showing up again in the shorter term chart. So, we've had a truce with between China and the U.S. on the tariffs, which is a good thing, may bode well for the markets next week, regardless of whether it's a short week or not. So let's take a look at specifically, let's look at the SPY, the 1 day. You can kind of see here how we made this double bottom, and we've had a nice run up this week. Powell coming out with an announcement that maybe they're slowing on their rate hikes, and the market responded positively to that. And this level here, this sort of 281 level, double top from from October, November. 281 is going to be obviously pretty significant level of resistance. If we can get through that, then maybe we'll challenge the top up here. But right now we're looking like we might actually push back up to 281 if we have a good market open and it holds. So we're making double bottom here, and see if we're stuck in a range or if we are going to be making new highs in this last quarter and into next year. IWM, the Russell index, again, sort of a similar chart here, double bottom, double top, and again, it remains to be seen whether it's just going to chop in this range, going to go up to this level, pull back. And on pullbacks, we'll be looking for higher lows, so we'll be looking for a higher low, and if there's a pullback, we'll be looking for a higher low, which may indicate that we're back into a uptrend. QQQs haven't fared quite as well. We had a low, and then we had an even lower low. We didn't really double bottom, but it looks like we bottomed here, maybe a bit of a double bottom on a very short-term basis, 3 days. So it looks like it's coming back up too. And again, this level right here will be resistance for it, and we'll see if it can punch through there or if we're just going to be consolidating sideways. So let's look at some specific stocks that I've been looking at. I think the first one that is interesting to me is CGC. Pot stocks, as you know, we've had a pretty decent run in the pot stocks. They look like they've made this bottom here, and it might be worth an entry on like the king of the pot stocks, CGC, or one of the kings. Might be a decent entry here at this level, 33 level. It seems to be holding. Made a higher low here, and I'd kind of use maybe a stop around here, And if it can hold, we might be able to get back and fill this gap, which would give us a real nice risk to reward. So, entering around 33, risking $1 and hoping to get up to maybe, 37, 38 before you get into this resistance level here. So that might be an interesting play on Monday for a sort of a rebound in the pot stocks. And I believe there's some legislation coming where they're going to, in the States, where they're going to legalize hemp. And so it might be also a bit of a catalyst to boost these things, these pot stocks higher. KWEB's another interesting one. I'm looking at that because, obviously we've had this deal over the weekend between China and the US, and it looks pretty positive. And the KWEB is the Chinese internet stocks. It's a ETF, and you can kind of see here, made a low, made another low here. Now it's making higher lows, and really like it if it's going to break out above this this sort of 44 level right here, and then it could push higher, could push up to this this prior level of failure or resistance, which is around 46, which would be my initial target. And you could use sort of like this 42 level as your level of stopping out, which it seems to want to hold here. So I think again, and potential for a nice swing trade, at the very least back up to this point of resistance here. Pretty decent risk to reward, especially if it can break through this level in this moving average, 50. What else are we looking at here? Natural gas. Natural gas has been a face ripper for people that have been short. I'm looking at the 60-minute, by the way, on this one, just to see what it's been doing over the last, say, 2 days. And it's kind of found it's chopping along a base here. I'm not as confident in this trade, but it does look like this is an inverse to the natural gas. So if natural gas prices start to fall, it should go back up. And you could have a good run. Cold isn't quite as volatile as the other one, which is DGAZ. DGAS just screamed higher when UGAS is the long. UGAS screamed higher. DGAS really sold off. And DGAS is a 3 times beta place on an ETF, and so it moves a lot more than cold does. This is a little less volatile. But it might give for an interesting entry here. This is a low, lower, again, higher lows. If this level cannot break down any further, it might give for an interesting pop back up to at the very least this level, and then maybe it might pop higher up to one of these moving averages like the 50. But again, I'm not quite as confident on that one, but I'm going to watch it anyway. And UWT has been the opposite. This is a play on oil prices, and you can see here I played this short through DWT all the way down here. I got a really nice swing trade on that, and now we seem to be into a bit of a bottoming pattern. So the question is it going to do this and then go lower, or is it going to do this and then maybe we're going to have a bounce? I'm going to bet on a bounce here because the risk to reward is pretty good. And I would say that, if it can hold this on the UWT, if it can hold this 1250 range, it might be good for a pop, at least back up to, this level like a 16 or 1625 maybe. So it might be good for a pop. I don't know if it's going to be a reversal, but at the very least, it might be a decent risk to reward. Get some pretty good volume on Friday, and so I'm looking at that for a swing trade as well. So that's it, guys. Hope everyone had a good week. Sounds like we're going to have a day off on Wednesday to remember Mr. Bush Sr. And that's it. So if you like to swing trade, or if you'd like to learn more about swing trading, check out my book, How to Swing Trade. It's on Amazon. 3 different types of media you can take it at. You can get a hard copy, e-version, or audio version. So thanks very much, guys. Have a great rest of the weekend, and we will see everyone in the Bear Bull trading room in the morning. Bye for now.